Hey guys, we've got some fresh news out for the Help to Buy scheme. If you've been following the channel, we've been following the progress of this scheme for, it feels like 2.5 years now. I want to say 2.5 years. Right now, we are at the point here. And so let me just give you a bit of a rundown about what the scheme is. It's a co-ownership scheme. So the federal government will pitch in up to 30% for established properties or 40% for new builds for first home buyers. On top of that, it'll allow first home buyers to get in on this scheme with just a 2% deposit. If there's any stamp duties or anything like that, they're payable. Apparently government's going to do something about stamp duties in January next year is the rumour, but 2% deposit is all you need on this scheme. So I think the thing to address first is that this scheme is going to push the property market higher. And I guess if you're a first home buyer, you've got to play with the hand that you've been dealt. This scheme could be the opportunity to get into the market. And if you believe that property prices will keep on continuing to increase, if you believe that, Australia is basically turning into a country of landowners or renters, then perhaps this is your chance. In terms of the best interests of the country, obviously it's not a good thing if you're giving people 30% or 40% extra cash to go towards the property. Obviously that's going to push the property market up a long way. So given all of the demand, all of the immigration, interest rates dropping, all of this government support, and I can tell you Help to Buy is one scheme out of a plethora, out of a lot of different schemes that have been implemented, a lot of different things that are coming. So the government are rolling out the cash, and it's going all into the property market. So yeah, unfortunately first home buyers have to deal with higher house prices, they have to deal with higher debt, and they have to deal with being in debt for longer. Having said that, I've looked at this scheme and there are ways people can minimize their debt. They do have to be smart about that. They can't be easygoing. Let's just say, we have to be really serious about debt. And go back to maybe a few generations ago when our grandparents and grandparents were basically allergic to debt. So anyway, if you want to look at debt reduction, there's links in the description below. And if you want to get into buying your first home, there's also links you can sign up to below to try and figure out all of this kind of mess, because it is super confusing for first home buyers. Having said that, let's talk about what's actually happening here. We can see here, this is the government website, legislation.com.au. We can see that everyone's bestie Claire has pushed this through, published June 13. So there's a whole bunch of stuff on here. It's a 50-page document or something like that. And we're just going to take you through some of the things within this document. I used our other good old friend ChatGPT to basically figure out a few things that are potentially hidden in all of this kind of fine print that we may want to know about. And I did uncover one or two things. Before we get onto that, if you're in Queensland have front run this. In the last couple of weeks, the state governments have to basically get ready. So in the last couple of weeks, Queensland, Victoria, New South Wales have all enacted this stuff. So they're ready to go on these schemes. And actually what Queensland announced last night is that they're going to bring in a new scheme of their own, which is basically the same thing. There are a few slight differences. So if you are from Queensland and you're a potential first home buyer that would want to get on a scheme like this, I'd urge you to book a time to have a chat below, because the truth is with these schemes, there are limited spots, and I think they're too generous. They are way too generous. And the people that get on first are going to win because they're going to help push the property market higher. So, alrighty, let's get into a few things. So there's the obvious qualification stuff. You can jump online and look at all of that stuff. I've done other videos on the qualifiers before. What I want to talk about is a few other things that people don't really realize. It doesn't necessarily change the game in terms of accessing the scheme, but it's worth knowing up front. So you have to live in the property as the principal place of residence. You can't just move out later on and rent it out. That's not allowable on this scheme. So what happens is, because it's a co-buy scheme, the government are on the title. So they get control over a lot of what you can and can't do. And what they say is you have to live in this place. Another thing you can't do it appears as if you can't do by the way this is worded, is that you cannot access equity later on. So if the place goes up 200 grand and you want to access equity for whatever reason, you can't just access it. It's got to be for a reason that's acceptable for the bank. So, for example, if it's to do a reno, a small reno, that's fine. If it's a large reno, they might ask a number of questions about that and they might decline it. If it's for something personal like holidays or a car or anything like that, I'm pretty sure that's not going to be cool with them. Okay, next part is compliance and reviews. Not many people understand that built into this legislation, the government have said they can review you every 5 years to see if you still fit within the scheme. Now, this is really contentious because they're saying they can review your income. So if your income goes up over the cap in that 5 years, they may force you out of that scheme. Which could force you into selling the property. So we can see here Housing Australia can terminate agreements for non-compliance or change in eligibility. So the major one being the income goes up too high. It's worth noting, guys, as I said before, the initial allocation for this scheme is 10,000 places nationwide, distributed per capita amongst jurisdictions. So I'm assuming that's per capita amongst the states. Again, if you want to get into this, those 10,000 places are going to go really quick for this scheme. I've got a wait list of a number of people already wanting to get on this scheme, and there's 20,000 brokers Australia-wide. Okay, lenders must be approved by Housing Australia, so not all lenders will want to get on this scheme. So I also went in there and asked it about structure and terms. So basically how it works is a normal home loan for whatever your amount is, you don't make repayments to the government for their part. The government take a second mortgage over the property. You hold the first mortgage, or the bank, holds the first mortgage. The government has a second mortgage over that property. So again, here it just says participants must notify Housing Australia before borrowing additional funds or refinancing their mortgage to replace it with a larger loan. So I'm assuming they're going to be very difficult there. If you've got dreams of doing things like, property investing or anything like that, accessing equity, this is going to potentially act as a kind of an anchor on that, I guess you could say, because the government control that title. So if you want to take out whatever, 100 grand in equity to then go buy an investment property, they're probably not going to like that. So they're probably going to decline that. That goes into the larger question of, is this suitable for you? This is really aimed at people who don't have any other opportunity but to get on this scheme. So if that's your only opportunity, that's your only opportunity. Okay, so this bit's for the potential borrowers out there. The pros for the borrower: lower deposit, only 2%. Which is basically nothing. If you can't get together a 2% deposit, then potentially home ownership isn't for you at this moment. The government put in 30% or 40%. So basically it can lever you into properties that you would never be able to purchase on your current kind of situation. You don't pay any mortgage insurance. That can be up to 4.5% on the total loan value. So a significant amount, a 500 grand loan, potentially that's 20 odd grand in mortgage insurance that you don't have to save or pay. It'll reduce the monthly mortgage repayment. So you can structure this, let's say it's a $500,000 property and you only take whatever that is, let's say a 400 grand loan. Well, it allows you to pay that 400 grand loan down quicker and then purchase back a share of the government's debt later on, and that can be a strategy to pay out the debt. There is a downside to that. Obviously, if the equity goes up, then in this example, that 100 grand will increase by whatever. So let's say the property goes up 100%, the government now owns 200 grand and you've got to buy 200 grand back off the government. So yeah, it could be worked both ways. I would suggest that anyone who gets on this scheme needs proper long-term planning. Otherwise, they're just going to end up in debt for longer. They're not going to be in a good situation later on in life when they've still got government debt or they've got less of a home to pass on to their family. No interest on the government share. You don't pay interest on the government share, as I said before. Flexibility in repayment. You can repay the government in 5% increments, meaning you could refinance your home loan by 5% of the debt. Not that you do only 5%, but you could do that. And then you could consistently do that and pay down the bit you owe the government. Cons for the borrower. Shared equity means shared capital gains. I just mentioned that before. Usage restrictions, I've already mentioned that. Approval and notification, again, I've mentioned that before. Possible impact on borrowing capacity. Don't see where the impact on borrowing capacity is there. If anything, it's making it easier for you to borrow money. Valuations and legal costs, you have to pay for that, but you already have to pay for that anyway. Repayment conditions can be triggered. That's the big one that gets hidden here. Like if your income goes up and then they review it and you're over the income cap, then they can make you repay it, which could effectively sell the property. The bottom line here is that if you're a first home buyer and this is the only option you've got, then this is the only option you've got, and it can get you into that property you would have never been able to get into before. That's basically it with the pros and cons of this scheme, guys. It's coming quick. It's only got 10,000 spots. There's a link to my help to buy waitlist below. I suggest you get onto that as quick as possible. We can help you front run and give yourself the best possible chance to get into the market. So there you go, guys. That's the update. For those of you who are in the position where you're wanting to use this scheme or potentially use it and get into the market this year, I suggest you get your ducks in a row and you move really quick. There are only 10,000 spots on this scheme, and given how generous it is, I can see this scheme, all of those 10,000 spots going really quick. In the links below, there's a link to my help to buy a waitlist. So what we do is we assess your eligibility, not only in the help to buy program, but all of the other programs. We'll sit down with you and we'll get you to the front of the queue, because what's going to happen when this scheme drops is there's going to be a mad dash and all the lenders are going to get tied up. The turnaround times are going to get tied up. And for the guys that get in first, hopefully, they're going to reserve their spot and they're going to have access, because that 10,000 people are potentially going to push the property market higher, because they're aimed with another 30-40% of cash that they would have otherwise never had. So they're going to go in, they're going to be bidding properties up. So if this is you, if you're the first home buyer and you've got a small deposit and you're struggling with affordability, maybe this is your time, maybe this is your chance. Find the links below. Guys, I'll be interested to see what you think about this. Please leave some comments, ask some questions, or if it's more of a private nature, again, you can find the links to my calendar and have a chat with me about that. Cheers. Bye.